Morning all. Sorry, just dealing with a customer support query. Somebody's having trouble getting their indicator in their MT4 for some reason. So, morning everybody. Blimey, chat's busy this morning. Crikey. You've all been chatting away while I've been sitting here doing other things. Morning Ladder, morning Diamond, morning Eric, morning David, morning Cam, morning Papa, morning Brian, morning David again. Germany 30 appears to be within range. I may stay away from the ORB today. Watch it. Fly and Lee can make the money, yeah. We've got a gap fill potential for the DAX this morning. So we've gapped up. So it looks to me at the moment like it is trying to do a gap fill on the day. So 48% of gaps get filled straight away. I can't remember the exact statistics. I should have this to note, shouldn't I? Then you move up to something like 78% fill the same day, and then the rest of them fill within whatever. So there's an opportunity today. Obviously, we've got 5 minutes now to the open, so we're just under. So that's going to be at the moment your 15-minute pre-market open. So there's a chance we might just flush straight down for a gap fill. It's not far away, so it'd be an easy one to do. So if you took the pre-market 15, you're looking at 14 pips stop and a 38 pip reward. So it's a pretty good risk reward short this morning. But we're still stuck. So we looked at this yesterday, didn't we? This daily sort of control candle we've got, which we're stuck within at the moment. It did peek its head out a little bit, but we're well and truly within this range at the moment. Every time we touch the lows, we're popping back up. Every time we touch the highs, we're popping back down. So this morning we're here with a potential gap fill. So what I foresee today is potentially a gap fill and then a push to the upside, possibly. But you know, that's just something that could happen. When you look at it on the lower time frames, obviously we're within that range. So, yeah, who knows? We're bang in the middle, so it could go either way today, couldn't it? News-wise, excuse me, we've got today the GDP for the US dollar. It's a bank holiday in Japan. Now, interestingly, when we have a bank holiday in Japan, we quite often get a massive amount of movement on the yen. So if you're in any yens, I'm in a euro yen short at the moment, and I'm at break even on it. I basically got into it somewhere around here, added, and I'm sorry, no, that's not right. I'm somewhere like that. So basically, I'm roughly break even where we are at the minute. We quite often on the bank holidays in Japan, we get this ridiculously big movement on the yen. So they basically manipulate the yen without them having been able to obviously do anything about it. So just keep your eyes peeled on these yens today. If you see a fast move starting, potentially it's the start of something big. So we could have a big rally like that. So just watch that this morning. There's no ADRs so far. News-wise, as I say, we've got GDP 130, which is an hour before the market open. And then we've got unemployment claims alongside that, second day of G20s. Not expecting much to come out of the G20s. We've got oil this afternoon at 4 o'clock as well, oil inventories in case you're in any oil positions. We'll have a look at oil as well in a sec. FOMC last night, not a lot. It was a bit of a dud last night, FOMC. It happens. There's nothing new said last night. So what we basically got was somewhere around there. Where are we? 7, 9 o'clock there. So that was your FOMC move on US dollar CAD. So very little movement on FOMC. We had a bit of whipsaw on some pairs. But basically it pushed a little, came back, we've dropped. So it basically is as if it didn't happen yesterday. So we can kind of ignore FOMC. Morning, Philip. So yeah, just ignore that one. The meeting minutes basically laid out the potential for more upside movement. So The participants said the inflation in the last 3 months has eased, but they need to see more progress. So, i.e., inflation isn't coming down quite as much as we wanted it to. The continued tight job market will contribute to upward pressure on inflation. Unemployment is coming down, or it isn't going up, basically, but that doesn't help with the inflationary pressure as well. So it's all a very, very, very careful balancing act. It's very hard to get it right, which is why it very rarely is right. Some participants predicted, and participants basically they're talking about the board that decide what happens with monetary policy. Some predicted an increase and in the likelihood of a recession, which is interesting because there's a lot that say that we're not going into recession. The IMF say that the US isn't going into recession. So there is still a lot of fear there that there's, we are teetering with the Fed at the moment. It is going well, but at any moment that can all fall apart. It's like a house of cards. And several participants advocated a raise of 50 basis points. So that takes us up to the 5.25 target, which is what they are anticipating being terminal rate for the US. So nothing new came out of Fed last night, of FOMC. 25 basis points hike in June, a near certainty, which means that we will get one more 25 basis point hike before that, if that is going to be the case. NVIDIA, market's just opened, sorry. So we've pushed up at the highs. I just want to watch the NASDAQ at the open. See what that does this morning. We've had a NVIDIA earnings come in positive, which will be bullish for NASDAQ. Revenue was on target. Okay. Wow, 88 on a target of 81. That's pretty good. Right. Or inflation pressures easing the global economy. 2% inflation is the core target. Yeah, as usual. Australia. Yeah. Fine. That's nothing exciting there. So, yeah, we might get a bull move this morning. Looking at it, I didn't see that in NVIDIA news. We have had a little push Globex, and we've gapped up. So there's a gap fill opportunity. So if you're on the pre-market 15, you're long, tapping into the pre-market highs. So see if we can get a move above there. Looks like we're finding a bit of resistance at the minute. So we might get a bit of a rally, but that might well be this afternoon. So. Just sitting on the highs. Okay, we're pulling back from the pre-market high. So this is your 5-minute open. This pre-market 15. I've got a real love-hate relationship with this. The EA that's running the pre-market 15 is doing very, very well. It's not doing very, very well. It's doing all right. It's in profit. But I find this very hard mentally to trade this pre-market because you do get a lot of stop outs on it. But when you get the move started, when the actual move kicks in, like it did with the DAX yesterday, it really makes a lot of money because you've got such a tight range, which means you've got an increased lot size on it. So although you get a quick stop out quite often on this one, this is the one that actually is proving to be one of the most profitable set files, the pre-market. But mentally, it's very hard to trade. I much prefer trading the 5, 10, 15. It's a much more psychological, nice thing to trade. But so you're long, basically. I'm always targeting a 1.5R on the pre-market. So there's your pre-market 15. There's your break high. So I'd be targeting a 1.5R on that, which is how my set file's set up. So I take a quick profit at 1.5 and then trail it in and go for a runner. So the days that you get those straight away, you really cream it. It basically just goes straight up to like 2.5, 3 grand. But the days where it opens a little weak, a little bit like it is today, if you look at the NASDAQ, when you get these weak days, you always get at least one stop out. I'm anticipating that happening. We'll go short. We'll come and do the gap fill. So you'll always take one loss. So it's tricky. Very, very tricky. So there's your 5-minute opening range in. Wow, where's my offset gone? I haven't got an offset set on that. Let me just offset that slightly. It should be offset. That's me, fat fingering. Still not quite sure what to set the continuous time to. For now, I have it on 30 minutes. Faster open, but I think that's too short. So I'm using 1.5 hours on the continuous. So I set mine to 11:30. So obviously 10 o'clock is the open for me on my broker, my brokers, or most brokers, it's UTC plus 2. So I set it at 11:30. So basically, if we haven't got that break done within an hour and a half, I'm not really interested. NASDAQ's broke short. So I would expect to break out short here. So yeah, I think an hour and a half, but 30 minutes I think is too tight. It's gone within 30. If you look at the, what were we looking at yesterday? The Dow. If you look at the Dow yesterday at the open, where are we? That horrible choppy mess that we had at the open. So there's your open, yeah? So that's 5, 10, 15, 20, 25, 30, 35, 40, 45 minutes in, we started the move. Although it wasn't a move, was it, yesterday, really? Because they were just sitting sideways waiting for FOMC, which was just a hideous one yesterday. Literally just went sideways waiting for FOMC and then pop. But yeah, I reckon you could set it to an hour would be a good time as well. If it hasn't gone within an hour, I think 30 minutes too tight. 1.5 hours is okay. And 1.5 hours is Al Brooks's high-low strategy, yeah? So within 1.5 hours of the session start, you've seen the session high-low. So we know that the move will have either started and stopped or started ready for a continuation. So the theory is within 1.5 hours, after you've moved 1.5 hours. So let's look at the 1.5 hour on this. So there's your open at 9:30. So sorry, at 14:30. So it's 1600. Yeah, which is there. No, there. Yeah. So by the time you get there, theory is with a accuracy of around about 90%, you've seen the high or the low of the session. Bear in mind, this is an FOMC. So in this particular case, on this particular day, that wasn't actually the case. This was a rotation ahead of FOMC, obviously. So it's a little bit of a different scenario day. But on a typical day with a 90% accuracy, either that or that is going to act as your high or low. So if you haven't had a breakout within that period and you're in a tight range, I don't really want to play. That's the way I'm seeing it. But I think if you used an hour, you'd be like knocking off, what, 6 candles there. So if you haven't had the break in that amount of time, it's not happening. But 30 minutes, I think you'll find on tight consolidation days where, for example, with the DAX, we get news sometimes, don't we? Which comes in at 8:30 UK time, which is half an hour after the open. So if we've got a news event being released at 8:30 UK for the euro, for example, which we quite often do, you're just going to get an accumulation until 8:30. That's 30 minutes. So if you say stop trading at 30 minutes, when the news hits and the break starts, you're not going to be on it, are you? So I reckon somewhere either an hour or an hour and a half is ideal. However, saying that, I've got set files running, and all the previous set files running were using end of day close. So they just traded all day. and they're absolutely great. So there's no right or wrong with this strategy. You set it as you see fit. They all work. It's just, some days, like yesterday, I had two set files which made a $1,500 and a $2,300 profit. I had one set file that lost 2,000. Yeah, they're all trading the same opening range breakout with slightly different settings. One lost 2K, and I made 3 and a bit on the others. It's horses for courses. You're never going to get the right set file on the right day all the time. Right, so we've got a double-ended stop hunt on the NASDAQ. Obviously, on the Dow. We don't trade the Dow anyway in the morning. So 5-minute opening range. If you're pre-market, you're long. If you're 5-minute opening range like me, we've got an inside bar at the 10. So we're looking at the 15-minute now. Have to say, it's impossible to tell at the moment what the hell we're up to. So we just got to wait. So while we're waiting, I'm going to watch this on my other monitor, just so I can update us when I see something happen. Looks like it might go for the low break now. I think this is the more likely move today. Let's see. There we go. There's 15 break, the 5-minute break short. So yeah, ADRs so far, there's nothing to look at all today. RSIs, flat as a pancake. So everything we had extended yesterday and the previous days has all come out of extension. So all of these pound pairs that we were looking at. Oops, wrong one. All these pound pairs that we were looking at on the extensions, on the RSIs, all pulling back. Yeah, so all the entries that you've had, if you've had them on these, you're kind of starting to move now. Some of them have moved more than others. Pound CAD, nice pullback, 50% so far, targeting the propulsion gap. Pound Swiss, stuck sideways at the moment on the pound Swiss. That hasn't made any progress at all. You had a down day yesterday. So with all these, it depends when we had these ADR hits, where you got in. Most people, I think, would have got in somewhere around here, meaning that you will have had a second entry on there, which means you've had a break-even exit on all of these if you wanted it. But I think that propulsion gap is definitely in play. Pound yen has hit the propulsion gap already, so that trade's done. Pound New Zealand has already done as well. Pound US dollar has already done too. So all the pounds have played out. So every RSI extension on the hourly that you took pretty much is done, apart from the pound Swiss. That's the only one really which has just got stuck in a consolidation. We've had a bit of a weak Swiss franc, so the pound's been able to push against that one. So yeah, they all worked very nicely. All the others we had as well. There was a US dollar Swiss. Oh no, that was a long, wasn't it? We didn't want to take that one. So yeah, US dollar yen. If you took that one a couple of days ago, that one's paid out as well, but not a tricky one to take, that US dollar. So there's nothing to look at there either. DAX has just pulled back up inside that range again. So might be looking at a 15-minute break today. It's not really very happy either way, is it? No volume. Why have we got no volume? We're not waiting for anything, are we? Weird. It's just a quiet open. So we'll have a look through the bias scorecard for any opportunities to get into and look at the sentiment. So the sentiment today, your top longs and shorts are pretty much very similar to the previous. So David Ladder, I have mine set for an hour and a half. Yeah, hour and a half. think is probably good. If you think about it, just covering that again quickly. If you're playing the 15, the starting point of this strategy was the 15-minute opening range break. The 5 obviously gets you in faster, but what we quite often get is after the 5 we get a move starting, don't we? So, but the 15-minute opening range is the bread and butter, the safer, less drawdown, but less profitable version of the strategy. I'm hedged. And we've gone long. Great. So I'm going to stop out on the short by the looks of things. Well, one thing we know, whichever way it goes, I'm going to make some money and also lose. So the 15-minute obviously is the safe one. If you go with a 15-minute range and only use a half an hour before it shuts down the pending orders, you run the risk of your 15-minute opening range doing a move to the upside, a pullback, and a pullback, right, in market structure. And depending if you have a trailer on or not, you might get stopped out on that pullback. And then when it actually goes for its second leg and starts the trend for the day, you will have cancelled your orders. So don't forget, this is a breakout, a trend breakout strategy. Trends take time to establish. Market structure takes time to get underway. That pullback there is half an hour. Yeah, so half an hour is way too tight. Unless you get the, if you get the crazy let's go for it today moves, no problem whatsoever. Obviously, it doesn't matter, does it? You really want it to shut down at half an hour because you don't want to take any secondary trades. But like I say, there's no right or wrong. So I'm hedged. I hate being hedged. Anyway, I'll let that go. Can't do anything about it. So your top buys and sells from a sentiment perspective today, US dollar CAD. So looking at the US dollar CAD, it is along. We're looking for pullbacks. So if we get any pullbacks back down into propulsion, if we can get back down into here today, that's where I'll be looking for long opportunities. So ADR hits. Unlikely we'll get to an RSI. It would need to be quite a strong pullback to get to an RSI extension on it, but an ADR, again, quite tricky. So drop down to M5, basically. If we pull back down into that propulsion area down there, wait for a reversal alert for a long opportunity, continue that upward movement on the US dollar CAD. So we've got our long. Sentiment is short. Everybody's shorting US dollar CAD at the moment. Yeah, so the world and his wife is short on the US dollar CAD. Therefore, we should be looking for it to take out the liquidity at the highs. Yeah, so they are short liquidity. 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 Just keep long in it until they stop being short and then come the other way. So that looks good. Euro yen, US dollar yen, these have been longs for ages. So I'm a bit tied up with this one, Euro yen. I'm short on this at the moment on a mean reversion trade. So it's got also a long sentiment on it. So at the moment, as you can see, we're on day 5 now, or day 6. DAX has just taken out the, just gone, basically. We're off. So it stopped out on short. I'm long. Let's have a quick look at where we're going. Before we look at the euro yen. Yes, right. So we're looking at weekly high. So again, this control candle that we're in on the daily, straight back up into propulsion, and that weekly high is first stop. That's halfway to ADR, basically, or 3/4 of the way to the ADR, which is the high of the month, I believe. At the high of the month? No, not quite. That's the high of the month. So yeah, so we're reaching up for that level there. So 155.40 is your high. Which is there. That's your high. Miles away. So yeah, euro yen. So yeah, it's a tricky one, very tricky. We are multiple days sideways now, and the range is contracting dramatically. The ADR on this is 113. So we've got this really tiny range, like 60 pips, 60 pips, 60. Bit of a bigger one there, 90, 80. Yeah, so we are well within ADR every single day at the moment. We had that big, strong ADR push, look here, which was a 150 ADR roughly. And since we started that pullback, all we've done is had a couple of up days and we've sat sideways on this. So all these yen pairs, if you look at them all, like US dollar yen as well is another long opportunity. They're all stuck, they're stalled. So nothing really seems to be able to make a lot of progress apart from that pound news. So the news obviously helped the pound up, but obviously it's come back down again. So it just tells me that we've got quite a strong yen at the moment. They're holding everything in place. There is nothing that is able to make any progress whatsoever against the yen. However, they're not rallying it. They're not pumping it either, which worries me because this is kind of what we tend to see before an intervention comes. And this is what, I mean, I don't care because I've got a short on euro yen. So if it intervenes, absolutely fine. I don't care. Do it. But as for these longs, obviously with sentiment, whenever you're trading sentiment, these are based on current retail positioning and where current liquidity is when the market needs to go and find it. However, when there is a news event or an intervention or anything happens that is going to make a big fundamental change to the market, it's going to go regardless in any direction it wants to. So sentiment gets thrown out the window. If the market needs to go short because it's been some massively bad news for the US dollar, it's not going to worry about whether retail or right or wrong on it, is it? It's going to go. So if we get that intervention, all of these yen longs, or these 2 yen longs, are going to become irrelevant anyway, aren't they? So I just don't like the fact that every single yen pair is stalled. Like it's like the yen is building for a pop at the moment. So I'd rather be short than long. So be a bit careful if you're looking at these sentiment ones today. Those two specifically. Euro CAD and Euro Odd are the other longs, slightly weaker sentiment on those two, Euro AD and Euro Odd. So we've got COT positioning long. So again, just, buy the dips, wait for it to move. Euro CAD. So that's pulling down at the moment. So you could drop down, I think, now on this one. Wait for that reversal alert, potentially. We've just taken the Asian low out, which is very tight, obviously, because there's no yen today. So it's massively tight Asian range today. We've just taken that low out. So propulsion move up to there or potentially up to these highs. That's where the liquidity is sitting currently at these two levels. So that's where I would anticipate them moving to. Yeah, so just wait for a reverse alert, wait for some signs of strength on that. And then potentially you've got a long opportunity there. And the best shorts are the Aussie US and the Aussie New Zealand. So Aussie US, yeah, I mean, this is going to be quite difficult to get into. You're not going to get an ADR hit. Yesterday's high, you will find there'll be liquidity there. Anybody that did a short yesterday, they're either short from there if they got short in New York, or they're short with the liquidity there if they got short from the Asian session. So we'll probably find limit triggers there. But it's quite difficult to get into this one. You're not going to get any RSI extensions to the upside. You're not likely to hit ADR on this. So difficult ones to get into. We are down at a potential support at the moment on this one as well. Seems to have broken though. So Tricky. It's a tricky one. Like it short still, however. And Aussie New Zealand is the other short. Good luck getting on this. From a pullback perspective on this, obviously we want to try and get in on pullbacks. So you've got that high, and then this mess which was caused around the news for the Australian dollar and the New Zealand dollar. So this level here, which is this low, somewhere up there, or either of those, it's very difficult to pick an entry point for a short. But I would say if you get an ADR hit to the upside or any RSI extension on the hourly, those will be your entries again, short. However, with these sentiment trades, yesterday's highs and lows and the previous day's highs and lows seem to be the ones you want to take. So you've just got to wait patiently for it to move up. There is an option for it to take the 4-hour high, which is going to be the Asian high as well. So opportunity to get in there on the lower time frames if you can get a reversal alert short. Looks like a bit of a mess at the moment, this one, because it's just sideways. So yeah, I mean, if we get that Asian high taken out, that is potentially a good level, and then obviously moving up from there. Where the hell's yesterday's highs? Is it all the way up there? Yeah, you're not going to get to yesterday's high, are you? It's 175 ADR away. So yeah, Asian high really. That's the only one you got. Whoops. Only option you've got there really. DAX just pulling back. Morning, Seymour. Why not put the stop loss at the same spacing as the pending? I'm using, with this particular set file, I'm using 150 ADR. 150% of the range as a stop. As a little bit of an experiment, but it's got a fairly tight trailer on it. So the trailer on this one is running at 45 points basically. So it's a little bit of an experimental one, but in hindsight, yeah, it is getting hedged fairly easily. But yeah, I don't know. Just testing it really. It doesn't really matter too much, because if the loss is the same regardless. So if I have my stops here, yeah, where my entries roughly are, I'm not going to lose any more money because the risk, the lot sizing will be smaller. Bigger. But the loss will be the same, obviously, because the stop will be tighter. So it's exactly the same amount of risk. I'm just playing with a slightly wider stop loss, basically. So that the idea being is if we get that double-ended stop hunt run, yeah, I'm not going to get taken out on the positions. So I only take one loss rather than taking two losses on a double-ended stop hunt. That's what I'm testing, the theory. So yeah, it's just to give it more breathing room. Because this is just these days I know I'm flogging a dead horse. I know there's not going to be the ideal set file, but I'm just trying to find something that gives you a bit more wiggle room, but still gets you in with a decent lot size. So the double-ended stop hunt is the thing that really gets my goat when we get those whippy opens. So that negates that wider stop. But like you say, it does hedge you. Do you have a percentage of drawdown you look for before closing losing positions when hedged? No. So when hedged, well, I do. So on the hedging, the drawdown control is 0.75 This is what I'm testing at the moment. This is what normally what I use is 1 ADR. So when an individual position goes 1 ADR against, I then start drawdown control. But that's not how I do it personally when I'm trading manually. With the EA, that's what I'm using. I'm using actually a 0.75 at the moment on this one. It's entirely up to you and your comfort levels. Basically, the faster you get out of those positions that go into drawdown, the less drawdown you're going to take. And that's what I'm using this account for at the moment, is for testing this. I'm trying to get the drawdown control to remain under 1%. And what I'm waiting for, and unfortunately it's not doing it, it's ruining my experiment. What I'm trying to do is get into a bad position, and I can't. All it's doing is banking tons of cash. What I want it to do is get over 1%. And that's what I'm testing. So with a 0.75 ADR, closing 30% of the trade, when it reaches that, I haven't managed to get a position above 1%. But the maximum number of trades I've had on is 3, I think it is. Am I up to 4 now? 1, 2, 3, 4. Right, so it's this one. So I've got up to 4 trades on that one now in one direction. Oh, that one is as well. 1, 2, 3, 4. Yeah, 4. So that one has as well. So there's 2 positions now that have got up to it, but none of them are hitting 1%. And that's what I'm looking for. So what I'm looking to do is develop the hedging strategy using higher time frames, hourly, instead of M5, because the whole purpose of the hedging system is for an M5 scalping strategy. But I'm looking to develop it for hourly. But I want to make sure I can keep on top of the drawdown, because the idea is I want to run this on prop. But obviously with prop, I've got a 5% drawdown limit, which I've got to remain within. So I want to trade probably majors, because they've got more liquidity and tighter ADRs. And I'm just making sure that we can get within a drawdown. And obviously the way to do that is to do it on M5, because I get the trades in faster and I can test it much, much faster. But this is working very, very well for keeping on top of DD. But me personally, when I'm trading, if I never get into 28 trades. Obviously, I never expose myself like this. This is an experimental account. I'm always getting into maybe 2, maximum 3 if I'm feeling really eager on one position, on one instrument. So in that case, what I'm looking at is the overall drawdown on the account. Let me just get rid of all this. I'm looking at the overall drawdown on the account, and I'm looking at the individual drawdown on each instrument. So if an instrument gets to around about 2% to 2.5%, that's when I will start to do aggressive drawdown control or start to do some drawdown using profits. If my account gets to around about 15%, that's when I start to get worried. Not worried, but that's when I start to think, right, we're really wrong on some of these. We're not getting the pullbacks. We're not getting the profit take moves happening. I need to do something about it. And that's when obviously you start using your profit to offset against those losses. But if you want to use the EA to do it, if you're using the market reversal alerts EA, you can test this yourself. But I mean, I find it's better to do it per trade. Why are you not moving? I find it better to do it per trade, right? So you've got per trade or per basket. I find it better to do it per trade rather than per basket. So when a trade gets to, I wouldn't recommend half an ADR, because you're getting in half an ADR apart as a minimum, typically when you're position trading. So 3/4 of an ADR to 1 ADR. DAX is flying, by the way, just in case you're on the DAX long. I find 3/4 of an ADR or 1 ADR is a good level, and closing out 1/3 of the position to 1/2 of the position. Yeah. So closing 1/2 a position out will really help your drawdown on the actual position. And it will get your break even up much faster. Yeah. But it's a personal thing, really, personal preference. Some people have got a higher threshold for drawdown than others. So, but I always find you better to do it per trade, not per basket, because the problem with per basket is, if I show you on, on any of these, doesn't matter, just a chart. Let's try and find one that's got multiple positions on, that might help. New Zealand dollar CAD has. Right, so this has got multiples. So there's your sell there and there's a sell there. So the ADR distance between trades on this is 34 pips. So it will enter trades a minimum of 34 pips apart. This is 40, so that's roughly about right. What you find with some positions is you get a parabolic move off of news, an accumulation and a push. So what that ends up doing is you have a position here and you can't get your second position on until like 1 ADR or 1.5 ADR away from the original position. So your spacing is absolutely massive, which means that your average is really far away. Normally around about an ADR. So you've entered 2 positions, but you're already an ADR away from getting out of the position at break even. So it becomes very difficult. So I find it, if you wait and do your basket, your drawdown control on a position, you can get a lot of them form like this. Whereas if you do it per trade, as soon as this gets 1 ADR or 0.75 ADR away, it will close some of it out. So what that helps to do is bring that average closer to the second position. So if you get a strong push against you and you can't get a reversal alert because the market just doesn't weaken for a long time, your average is always closer. So I think the theory and the strategy of using per trade rather than per position or per basket is a better way of doing it. And with per basket as well, if you go 3 or 4 positions, 3 or 4 trades in a position, this will do drawdown control really often. And what it ends up doing is making losses when really you're not uncomfortable. So it starts losing you money before really you need to lose money. So it's definitely better to do it per trade. And it's like anything, the tighter you keep this and the higher you make that, the faster you'll get out of the positions, the more losses you'll take, but the lower drawdown you'll have. So if you're trading prop, you want to be a little bit more aggressive with drawdown control. But, you know, with hedging, like someone's just said in there, like ladders, no, who's it said? Whoever said, you know, you can lose with hedging. It's wow, go for it, DAX. DAX is off. You know, I've banked 13% in just over a week, a couple of weeks. When did I start this? 12th, wasn't it? 10 days, banked 13K. Sitting still in 10K a drawdown. Yeah, and you're always going to be in that. You know, whatever you bank there, you're going to roughly have the same there. Because think about it, if you're hedging, when it goes that way, you're going to go into the same amount of drawdown as you bank, aren't you? So you're always going to have a high red drawdown or high exposure, always. That's the nature of hedging. But the H1M5 set file, obviously, will only get into those positions if H1 is extended. So there's a lot of the time it actually gets into positions only in one direction, banks all of those without ever taking a hedge. And the time it takes the hedge is when it banks them, and then it starts you going the other way because you're extended. So what the set file is doing, in effect, is just running the RSI. Yeah. So we get in long here, and we play it up. And as this moves up, and RSI gets extended there, we get out of that trade, and then it goes short because RSI is extended. So it just trades, the hedging set file literally just follows the RSI cycles, the buy-sell cycles, which is why it works so well. But it is dangerous in the respect that if you get a squeeze, you will go into drawdown on it. So you've got to do drawdown control. I would never run the hedging set file really without drawdown control. But it's brilliant. It's a brilliant set file. So, but anyway, this experiment is not to test whether or not you can survive with every pair. I was fully expecting it to blow the account, but I'm absolutely amazed at the result. It's fantastic. If only this was real. This is a demo account. It would be nice. But yeah, anyway. Right, so just a quick look at the DAX because the DAX is off. So this is break even now, risk-free trade. We are approaching that level, which is potentially going to be resistance. Morning, Andres. Morning, Luke. Do you also trade during these live sessions? Yes, kindly alert us to when you place a trade. No, I don't do signals. You're in the wrong trade. You're in the wrong place if you want to blindly follow somebody that might die tomorrow, and then you'll never lose. You'll never be able to trade again. Go and learn to trade music. Don't follow signals. But if you want a signal, I've gone long on the DAX there. If you weren't here when I went long, you missed it. Sorry. All of my trading is automated, so you won't see me manually take trades often. It's all automated. Everything you need to know is on the website. Yeah. Go to the Position Trading Bootcamp, or go and look at the strategies section. Every strategy I trade is all on here, but I automate everything. So most of the time. So, you know, you'll see trades on here, but they're automated. Don't follow signals. Learn to trade. Think about what you're doing. Well, actually, what I would say is, first of all, think about why you are doing this. Why are you here? Do you want to learn to trade, and do you want to use trading as a second income, or do you want to use it as a main income? If you want to use trading as a main income, following signals is never going to make you a trader, is it? If you follow my signals and I decide, nah, can't be bothered, not going to do this anymore, you're out of business. If you follow anybody's signals and they decide to go crazy and go, oh, I've had enough of this, I'm going 30% long on this trade, I screw it. I'm either going to make $1 million or I'm going to lose it. You're going with them. Learn to trade. Don't follow signals. You'll never get the same result as somebody else as well. So, you know, for a start, there's about a 30-second delay on this. If I hit the buy button and get out within 30 seconds, you're never going to get the entry. Anyway, we know about that. Die anyone... Oh, I presume that means did anyone, ladder. Did anyone do some back testing on the TP distance? Is 1R, 1.5R, 2R, or 2.5R better? Yeah, I've done loads of back testing on distance. You're talking about the opening range breakout EA. So yeah, I've done loads of testing on TPs. I mean, hang on. There you go, this one. So this is the NASDAQ pre-market set file. So this column here, W, is take profit. So you can see I've got 100, 150, 200, 250 for position 1, and TP on position 2 starts at, I think, 200 and goes up to 500. So this is using 2 entries at the open. One is a scalp fast entry, and one is a runner, a 3, 4, 5 to 1. Yeah. The return on drawdown ranges from 5 or 4.99 and goes all the way down to, I mean, this was only 280 tests, I think. Yeah, 280 tests on this, and drops all the way down. 240 of the set files were positive and the others were losses. But there's very little difference. But the ones that made the better return on drawdown used between a 1.5 to 2 R return. Virtually all of them are 1.5 to 2 R. So getting that with the pre-market, with the pre-market set file, that quick move, you want to be in, out on that first 5-minute candle with a quick move, and then hope that you get the move in the direction of the opening range break, and that's where you get your runner. That's using a trailing distance of 20 points. So the idea being, like here with the pre-market open, let's say that's your pre-market, for example, you go stop loss there, entry there, you go bang, take profit somewhere there, yeah, and then that's the runner. But you trail by 20 points. So as this pre-market, this first 5-minute candle is flying, you're getting this thing reducing risk as fast as possible. It's a scalp entry. Whereas the 5, 10, 15, I always use just a trailer. I just get taken out on a trailing stop. So for example, here I'm going to get $370 on that trailer. 40-point trailer. But yeah, but do your own testing. Set it up for whatever you want. You know, there's so many combinations of tests that you can do with it. You know, percent target as well. Is it better to go for a 2% target, 3% target, or whatever? You know, the highest return on drawdowns I've found were targeting smaller amounts. So stop going for the runners. Go for 2%. So I'm risking 0.5% per entry. Going for either a 2 or a 3% return gets you a better return on drawdown rather than trying to go for those 4, 5, 6, 7, 8, 9, 10 runners with a trailer. But also going for a 10 to 1 still returns a 3.98 return on drawdown. So this is on the 15-minute, just using the 15-minute opening range, which is this entry here. So this long, this is the 15-minute opening range. 5, 10, 15, that one. Yeah, so equally running a running a trailer with it of 40 points, or going for a large return on drawdown, large risk reward, gives pretty much the same effect. Think about what this strategy is. The opening range breakout strategy is an opening range breakout trend strategy. The only way it makes money is if you get an opening range breakout into a trend. If it doesn't do that, it's very difficult to make money with it. You only need it to do it once or twice a week to bank that big runner and have the rest of them having either small wins or small losses, and overall the edge turns out positive. Yeah, like Brian's just said, they usually take 50% off at 2R and then trail the rest. So what I did in my set file testing was I actually took 2 positions. So exactly the same as Brian's just, wrong one. Like Brian's just said, instead of taking 50% off, what I did was I entered 2 positions at the same level, one of them with a TP there and another one with a TP higher up. So that is in effect the same as taking a 50%. And that's what I do with my pre-market set file. It enters 2 positions there, one with a 1.5R reward, one with a 10R reward, but it never hits the 10R. Obviously, what it does is it just gets stopped out on the trailer. So I get a quick scalp, break even, and hope the runner happens. If the runner doesn't happen, I make the scalp. That's the set file. But you can test all of these. You know, they all work. This is the thing. Not all of them. I mean, not every single set file is going to work, but the majority of set files that you do in the testing that I did, you know, I did over 100,000 tests. There's, you know, with most of them, there was very few that didn't make a return. You know, that one there, there's 320 tests there, and 320 of them are profitable. Every single one of them made a profit. There's 320 different variations, permutations there, and they all are profitable. It's just you just don't know which one's going to be profitable which day. So you just got to pick one with a fairly high return on drawdown, not an outlier. Like, don't pick the 3.35 one. That's an outlier. Pick something in the middle, something around about 2.5 R, and you'll get that over a long period of time. But it's not going to happen every day, is it? This is the thing. It's a frustrating thing to watch, getting taken out there and then watching that propulsion gap work and pummel it higher. But there's nothing you can do about that unless you're going to manually intervene. And that's up to you as well, isn't it? I've manually intervened on trades where I've taken a $1,200 profit there because I thought, this looks heavy. The EA can't see EA can't see that there's a load of wicks to the upside and it looks like it's about to reverse, or it can't see that we're hitting a resistance level. So I will take it off with $1,200 profit and it will pummel down again and not work. Other times I've taken it off here for $600 and the thing's gone through the roof. Sources for courses. Say, at the end of the day, it's a way to get into the market, and whether you manage it manually, whether you use a 20 pip trailer, 100% of the opening range trailer, whether you use a 2-hour return, a 1.5-hour return, or a 5-hour return, you'll get it if the thing goes. If we get a range breakout into a trend, you'll get a profit. If you don't, you won't. That's literally it, the strategy. Look, that's the same as any strategy, isn't it? David, that's what I'm doing. Basically, the hedging strategy on the 1-hour time frame, but have 2 accounts and 14 pairs on each. So you're basically trading every pair. So you're doing that. I have to say, I'm I know I hark on about exposure a lot, but when you think about it, when you're hedging, it doesn't matter exposure, does it? Because if you're exposed long, you're also going to get exposed short. So in effect, I think it would be fairly safe to actually run with an exposure of 4. You know, my normal no more than 2 rule. I think you'd be safe to run with an exposure of 4 because you will have made profit, obviously. If you're long, you'll have made, and it's going down, you'll have made profit on the downward movement. So you've got that banked, which you can use for drawdown control. And as long as the EA is doing its own drawdown control as well, I think that will keep on top of that. But I'll be wary about running all 28 pairs. But I don't know, if you're making money with it, you're using the 1-hour time frame. So, right, David, what's your set? Are you running? So if you're running this on 1-hour reversal alerts, what's your higher time frame confirmation? Are you using a higher time frame RSI extension, or are you just getting in on 1-hour reversal alerts and hedging regardless? So you're not using, I don't know, what are you doing? How are you hedging? Because there's lots of ways to do it. Yeah, I mean, that's fantastic. Fantastic. I love hedging. Nearly impossible to lose. It is impossible. It is possible to lose, but you've got to get a strong squeeze against you. Then you will lose. Well, you won't lose. You'll as long as you're scaling out, you'll just lose gradually, won't you? I feel the hedging EA is quite similar to an EA purchase called Agimat. Oh Christ! Don't talk about that crap. You've opened a can of worms there. We were talking about Agimat a couple of days ago. Yeah. It's just another indicator with a. Have you seen those? Yeah, you've seen these Ferraris you can buy for like 20 grand. Yeah, look good, don't they? Not real. They're replicas. So basically, it's a body shell stuck on top of another car. That's what Agimat is. Underneath Agimat, there's 2 other indicators, which you can get for free in MT4. Go and delve into it. There's a lot of them about. Well, my bad on spelling. Yes, they are BTP, yeah. Usually take 50% off the yes, trading every pair. As for NAS 100, is it long trend today? I've no idea. Have a look. So far it is. Are you asking if it's going to continue? Let me find out. This isn't the one I wanted. There's a crystal ball. You can ask it a question and it will tell you. I'd go and Google it yourself and just find the crystal ball, because I don't know. It's the honest answer. No one in the universe knows whether this is going up or down. If they did, they'd be multi-billionaires. Is it trend long today? So at the moment, to answer your question less sarcastically, the market structure is long. So you could look for a pullback long entry out of that propulsion gap. However, we have just run into potential resistance. So it could well reverse and come down and do the gap fill. I don't know, is the honest answer. No one does. Just get in and get out when you have money. Thanks, Lee. I'm done with Dennis. There's nothing wrong with it. Don't get me wrong. Agamut is it's a business, basically. It's all it is. It's another. He's just released something else, isn't he? And the thing I bought Agamut years ago, 5 years ago, something 6 years ago, 7 years ago. I don't know. I bought it ages ago. It looks really good, but it's not. When you start using it, same as all these things, when you start using it, you realize that it's not a magic crystal ball and it's not anything clever. The problem is you're using your useless retail charts, Brian just said. Yeah, exactly. These useless retail charts, what I should be using is footprint charts. I should be using candlestick charts instead of candlestick charts, with moving averages and volume profile and everything, because that can predict the future just as well as everything else. Yeah, I'll do some analysis in a minute. Yeah, music. Yeah, he's just released something else. I was going to say, Dennis, isn't he? Which and that's the thing that really hammered the nail in the coffin for me. He calls it an artificial intelligence or something, or machine learning EA or something. It's like, come on. It's just an indicator on top of an indicator, which draws an arrow, which gets you in, which has a 50-50 chance of going up or down at the end of the day. So they're all the same thing. David, well, it's not really hedging. It's the trend pullback. I set the EA to take trades based off the 432 on the 4 hour. Right, so using the daily moving average and extensions on the 1 hour. Market reversal on the 5 minute on every pair, 14 pairs, 2 accounts. So you're not hedging, are you then? Because you wouldn't be able to get a hedge on. Yeah, if you're using the 432 on the 4 hour, you're using the 72 moving average on the daily. Yeah, so you would never get a short. You can't get a short trade. You can only get long trades. The only time you would get a short trade is if we pull back down below the daily 72 and then pulled up above the 1 hour RSI and then got a reverse alert short. So by then you would be deep, deep, deep in the hole on any longs you'd taken. That's not hedging, is it? It would hedge you if you had that sort of scenario. Neural network, that's it, Big Papa, that's the word he used, neural network. So he's created a neural network EA. Come on. Only divvies fall for that sort of stuff. Right, Euro US dollar. So Euro US dollar, I was doing some analysis, wasn't I? I'm getting very sidetracked. These drugs are great. They don't make me talk a lot. Those that are new in here haven't been in here before. I'm on drugs for my trapped nerve in my arm, so they make me have blurry vision and verbal diarrhea. So Euro US dollar bias on that one is a short. There's no bias from COT or retail on it. It is purely fundamental. So the fundamentals for the euro are weaker than the US dollar. So be looking for shorts on it. However, this is a difficult one because the euro is also a long as well. So it's a strong against a strong, which gives you quite often a sort of range or in this case, what we've got is kind of a tight channel, a little bit like that. So Euro US dollar is always good to trade because it's got a fairly tight ADR, and it's because it's a major, it's highly liquid. So you always get a lot of push and pull. So regardless of which way you get in, if you get any extension on it, typically you will get a move big enough to get you out. However, the moves are very tight, so you need to be in and out fast on it. So, but it's pulling back to the 72 at the moment. We've had a really strong US dollar. Although the comments coming out of FOMC yesterday were not particularly bullish. They weren't particularly bearish either. But I get the feeling we might have a little bit of weakness in the US dollar, a little bit of a pullback starting. So it might be good to take a 72 bounce. But long term, I would look at this being a short. It's just a pullback at the moment on the downward trend. So I think potentially we've started this short now from here. That would be peak formation. I don't think we'll break back above that level. So I'll be looking for short opportunities. So any RSI extensions to the upside. Yeah. Any ADR hits to the upside. So just watching the RSI dashboard and the ADR dashboard. We've got a couple of RSIs just lit up. CAD Swiss. So yeah, Euro odd, I'd be looking for shorts on it. US dollar CAD long. So reverse alert on the 5 minute. You just had it this morning in Asia. There was your long. That's a sentiment trade as well. US dollar CAD. Cot bias is long. Sentiment is all short on it. So they'll be looking to hunt the highs. Yesterday's high. You get sidetracked without the drugs as well. Yes, that's true, Adrian. I do, don't I? I come in here more for a chat. Trading's boring. Sitting here watching charts and letting EAs trade for you is boring. So I just come in here for talking. US dollar CAD, yeah, so look at the RSIs. CAD Swiss. So we just had a CAD Swiss RSI extension to the upside. Bias is range bound. It's a sentiment short. So CAD Swiss, this looks like a good opportunity for a short. So we are pretty range bound, but we are ever so slightly in a downtrend. I mean, so it's a bit of a mess, isn't it, really, looking at it? But you've got a very well-defined range high at 150 ADR. So obviously this could turn at any point, but we are extended on the RSI for the hourly. So I would be getting in anytime, really. We get an RSI, a reversal alert on the lower time frames. So look down to M15, M5 and watch that reversal alert. As soon as you get that reversal alert, short. The market is currently sitting long on CAD Swiss. Yeah, 92% of the market is long CAD Swiss. All the liquidity on this pair at the moment is sitting down at the lows. Yeah, Asian low there. So there's where all the liquidity pools are currently for this one. So move to the downside. This looks like we've got a weak Swiss franc this morning. So all the Swissies are being rallied against at the moment. So this is a weak Swiss franc. As soon as that Swiss franc, mind you, apart from the pound, the pound's obviously weak today, is it? Yeah, pound's coming down. So yeah, that looks good. CAD Swiss for a short opportunity. H1 RSI extension. We're in a downtrend at the moment. Currently in a down channel. So extended, wait for the profit take move. You've got propulsion gap to trade back down into there. That one's already been tested, but you've got this untested propulsion gap, which will come and get tested at some point. So you've got a nice ADR move to the downside on that. It looks really good. Like that. Take that short. So this propulsion gap from yesterday's FOMC will be target. New Zealand dollar Swiss. RSI extension to the upside again. Market is all long, so we want to be shorting it. Again, good short opportunity. These are only just extended though, both of these obviously. So CAD Swiss is actually a little bit further. It's almost at 75, but nicely extended. So again, get some kind of pullback on it. That's the obvious thing to go for, the propulsion gap caused in Asia this morning. So runs back down into there. If it's going to continue long, that's where it will find its buyers. So you can short it back down into that area. So again, drop down, lower time frame, M5, wait for the reversal alert, trade it back down into that propulsion gap. Got potentially something like a 20-point move. So it's half an ADR. That's a nice extension as well, in line with retail sentiment. Yeah. New Zealand dollar Swiss. That's range bound as well. COT bias is long, so you're going against COT with it. This was the one we looked at yesterday, wasn't it? Isn't this the one that's rounding? Yeah. So we've got rounding bottom forming on this. So potentially we are going to start to shift back to the upside. The COT position is long on this. Not very long, but it is long. So yeah, that's good. Like, look at that one. Do you use pending orders with the ADR daily range to lay out positions once your directional bias is presumably right? No, I don't use pending orders. I used to. So when I before I built the market reversal alerts EA, I used to use. I developed the position trading strategy using pending orders. So the way that I used to trade before I built the EA to trade for me, or rather to get me into the positions, was, let's say, for example, I'm looking to go short on New Zealand dollar Swiss. What I would do is I would take a short here. If that didn't work, I would then look roughly half an ADR to an ADR away from where we are. So somewhere up in this area. I would look for the next area where we're potentially going to find a double top or a support bounce to act as resistance. So I would place a pending order there. Then I would look for the next level above that, which would be there, and would look at it and go, right, well, that's a little bit too close because it's less than half an ADR. But we have got this high here and this low here, which would form a little zone. So I would then say, right, I'll enter another pending order there. Yeah. So I would get in with a pending order at that level there. Yeah. So that's what I used to do. I would enter my first trade on a reversal alert of the indicator, and then I would manually set pendings where I wanted to get in at logical areas where price is going to turn. So I'd potentially map out the bad case scenario. Yeah. And I'd only ever do it for 2 or 3 trades. But obviously now the EA does this for me. The EA automatically gets me into these trades. It just takes the reversal alerts at a set distance away, because the market will do things like, you know, if you've got that level of resistance there, yeah, the market will push up and it won't get to it, and you'll get an M pattern reversal alert. I want to get in short. So if it doesn't touch that, or it doesn't want to sweep the liquidity because there's just nothing there, or it doesn't need to, and it just turns because somebody places a big order south, I get in. So there was a lot of times I found when I used the pending order version of the strategy with my pendings sitting there, the market would do that and it would accumulate, and I'd just end up stuck in drawdown. So that's why I built the market reversal alert CA. And I wanted to basically to say, right, I want to get in roughly half an ADR apart or more on my positions when there is signs of weakness in the market, in this case. So if there's a reversal alert and the distance between my initial entry and that reversal alert is more than half an ADR, just get me in the trade. Because if it's going to do I'm not going to touch that resistance and I'm going to pull back and accumulate, I've got an exit with a profit. Whereas I was missing them with my pending orders. The other downside to using pending orders is you get a push up and a parabolic move that goes like that, and then another parabolic move that goes like that. All that you've done is you've just gone into twice as much drawdown with no signs of market weakness. Yeah. So again, that's the other danger of using pending orders. You're trying to pop a balloon as it's flying up. Yeah. If you miss, you're going into drawdown twice as much as you need to, because your pending will just trigger and you'll just get run over. So if there's a breakout of a support or resistance level, you just get killed. Which is why, again, that's what the Market Reversal Alert EA was built for, is to say, right, if we do that parabolic move above there, fine. If then it does an M pattern reversal up here and gives me a reverse alert, get me in. So I want to get in only when I'm showing signs of market structure reversal, i.e. opposite directional movement. So I will get in there rather than getting in here, and I don't take that drawdown. I then start, because by the time we've done the parabolic move, the RSI is extended, it's ready to profit take, it gets you down and into a break-even position much faster. So you can do this. And that's what I say in the bootcamp. You don't need to buy the indicators. You don't need to buy the EA. You can trade all of this manually, and you don't need to use my strategy. You can use position trading on any strategy. If you want to trade pivot points, and your pivots are there, you could just put pending orders at the pivots. Just don't use stop losses. That's the only thing. That's the only difference. And you'll just basically get out on that movement. I don't trade pivots, so I don't know whether or not that's even a viable strategy. But there's all sorts of stuff you can do. But pending orders are dangerous, because if the market slams through a pending order, you just end up in drawdown. Or worst case, if you're doing that with a stop loss, you just end up going into a trade and straight into a stop. And you'd look at it and go, "Oh, I'd never have shorted that." No, well, don't put a pending order then. So you can do it either way, but that's what the reverse alerts indicator was built for, is to automate that, which is what I used to do. I've built EAs based on ADR, so I've got ADR EAs which use grids. And again, this is why I don't like grid strategies. People have asked in here before, what's my thoughts on grid trading? Terrible. Let's say we're sitting here right now, and all of a sudden the Swiss National Bank comes out and announces that it's made a $68 billion loss. What do you think is going to happen to New Zealand dollar Swiss? It's going to go boing, at least up to there. All that's going to happen with a grid trading strategy is you are now in 1, 2, 3, 4 positions in drawdown. Crazy. If you saw that happen in the real world, you wouldn't go, "Oh, short it, short it, short it, short." You wouldn't be sitting there shorting the crap out of it, would you? That's why grid trading doesn't work. One parabolic news event, you're stuffed. And let's say, for example, it goes parabolic, accumulation, parabolic, accumulation, parabolic. Stuffed, 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 stuffed. Blown. Yeah, which is why you need signs of weakness, that's the whole purpose I built the indicators, to show me when the market structure shifts were happening. So we've these indicators alerts, as we know, they don't work a lot of the time. Yeah, it's a shift in structure, but it doesn't mean it's going to be that. It could do that. But all it means is at least we've got some buyers on our side. That's all it's doing. It's saying, right, we've got sellers on side at the moment. Brilliant. Get me in, because I've been looking for a time to get in short. I'll get in when the flow of traffic is moving my way. I won't try and fight the traffic. The traffic's coming my way. That's what the reverse alert indicator tells you. When you get extended on the RSI and you get a reverse alert, it means that the people that have made that move are potentially starting to take profit now. So the flow of traffic shifts. You shift with it. With a pending order, you will just get in anywhere, won't you? That's the trouble with pendings. But they are also good. The amount of pending orders I've placed at double tops, and they've done that. And I'm like, I've woken up in the morning and gone, Jesus, what a trade. What an entry. There's a sniper entry. Quick, let me post that on Telegram and let me post that all over the internet and show what an amazing trader I am. It's a pending order. The odds of that pending order actually working are 50%, aren't they? Yeah. But sometimes it won't. A lot of the time it won't. What it'll do is it'll break out, accumulate, push down, entice some more liquidity, push up, grab that, and then it will go. What's that? An M pattern reversal. Yeah. So I like pendings, but you can still do it. Still a Flintstone trader, manually getting hands dirty. Yeah, I mean, it's no problem using it. Automation is there to make my life easy. I don't have to think about it. Yeah, if there's an RSI extension on the 4-hour and a 15-minute reversal alert, I don't even have to think about it. Yeah, that's why I built this, so that people can get alerts and go, right, let's have a look at CAD Swiss. Okay, it's extended on the hourly, so I'll be looking for a 5-minute reversal alert. Brilliant. That's down there. Is there anything that we need to look at? Right, well, there's possibilities that we're going to run that liquidity at those highs because it's a double top, and there's another area just above it. So do I want to take this trade now? That's your choice. The reason you're analyzing the chart is because the dashboard went, go and have a look at this. This is all this is go and have a look at it. What you could do now when you get that reverse alert on RSI, or the alert on RSI rather, is say, right, I don't fancy it here because it's a bit far above that to be a liquidity run. We've got propulsion gaps here, so it shows there's an awful lot of buyers, and ADR's not that far away. So what I'll do is I'll place a pending order at ADR, or I'll set the market reversal alert up, EA up, to take an ADR reversal on this today. You know, there's nothing wrong with manual trading. We've all done it for many, many years. It's just, I identified that I was spending a lot of time reacting to alerts, looking at them and going, yeah, not yet. Reacting, no, not yet. Reacting, no, not yet. So I built an EA to just basically replicate what I was doing in my head every time I got an alert. Do I fancy it? No. Why? Because I'm bullish on CAD Swiss. Right, I won't use it. So I set the reversal alert up to say only take longs. And I don't even have to do anything, do I? That RSI gets extended and we get a 15-minute reversal alert, I'll go long. I won't, the EA will. So, you know. Morning, Stevie. What's your view on creating an EA using ChatGPT? I've created one. I've created basic EAs on ChatGPT. Have a go. It'll have to be simple. And ChatGPT is a little bit, I find, like a child. A lot of the times, it will do exactly. I'll tell you what it's like, right? I used to run a web design company, and we used a lot of outsourced coders, yeah, in various places, Indonesia, in Pakistan, in India, all over the place, because they were very, very highly skilled, and obviously cheaper than UK labour. So we got cheaper programming done. Customers got cheaper websites. It's all win-win all round. The problem is, because of the language barrier, what happens is you say, can you build me a website for e-commerce that looks like this? You will get exactly what you tell them. You will get exactly the website you've pointed them to, doing exactly the thing. And you say, no, I wanted it to look like that. We can't copy it. Oh, right. And that's what ChatGPT's like. You say, code me an EA that will sell when RSI is extended above 80 with a stop loss of this and a TP of that. You will get exactly that. Unless you tell it that you need an input for TP and stop loss, you won't get one. So then you have to say to it again, now create an input so that I can change TP and stop loss, and then it will recode that bit. So you've got to sit there and you've really got to mollycoddle ChatGPT, but it will be able to build whatever you want. But something like the market reversal alert CA, nah, it's not going to be able to do that. Something that complex. It's just not good enough. It's just not going to be able to handle anything that complicated. But for simple stuff, if you want to test a strategy, if you want to test an RSI mean reversion strategy using a moving average filter, you could build that fairly quick, I think, in ChatGPT. And then tell it to get some input variables, and you can do some system parameter permutation tests on it. But I don't know. Stop making it look easy, Lee, Franco. What did I make look easy? I think I was talking about this probably at that time, wasn't I? About the CAD Swiss. Theory is, I'm making it sound easy. Yeah, I don't know if that's going to happen or not. Actually, it's there. We'd be targeting. But yeah, trading ideas are very easy. When trading actually happens. It obviously doesn't do what you predict, which is why everybody loses money. Brian, rounding bottom indicator. I see Lambos in the future. No, rounding bottoms, teacups and handles, rounding bottoms, chart patterns in general. They work until they don't. Yeah. A rounding bottom is a really good reversal pattern, and usually quite effective. But it's like anything, you are trying to pick the bottom. Yeah. So what you would normally do now is you would wait for the retest, and that forms the handle. So, which is a cup and handle. It's part of a rounded bottom. So again, it's all the same stuff. Cup and handle is part of a rounded bottom. Head and shoulders is part of other Elliott waves and all sorts of stuff. But, you know, look at the market structure you're fighting here. Yeah. So it looks like it's slowing down. Wouldn't be an indication for me to go long on it. It would be an indication for me to probably look for shorts. It depends on your bias, doesn't it? And depends on the time frame. Certainly not a rounding bottom on there, is it? Most it is. But anyway, it's, you know, depending what you're looking at. If you're looking at M5, you're not going to see a rounding bottom because you won't be able to see enough of the chart unless you go right out. And then what you're seeing on M5 is a double top opportunity to go short with a reversal. Look at that. Beauty. Getting short now. Reversal alert. Retest. Propulsion. Target. Tick. Morning, Stevie. You stated that you risk 0.5% per trade with the ORB EA. Is that per position or 0.75%? Depends on the account. I'm risking with the pre-market. I'm risking $250 per entry, which is 0.5%. So I'm breaking that that two entries down into 0.25% risk per position. Yeah, it depends how aggressive you want to be. With the ORB, you are basically, if that opening range breakout works, which this morning it would have just got stopped out, potentially. Was that the 15? I can't remember where it was, but you usually, with the pre-market, if you get the breakout, you don't get a second entry. That's the thing. So it's quite feasible to go in with 0.5% per entry, because if the ORB, pre-market ORB works, which it quite often does, that first 5-minute candle makes you the money. That's the one that makes you the money. And it's also very tempting to take the whole lot off there with 1%. It's $1,000. It's $1,000 there. If you're running a prop account with a 5% daily risk, 5% daily max, and you went in with 2.5% longs, 1%, worst case scenario is you're going to lose $1,000. So you're only losing 1/5 of your daily loss allowance. If it works, there's $1,000. You stop. That's 1% gain. You stop. Even with 5%, with 2.25% entries, that's 0.5% you've just made. That's enough. 0.5% a day is 10% a month. 10% a month on a 100K account is $10,000. 80% of that is 8K take home. That's enough. 0.5% a day is all you need. Trying to maintain it, that's the difficult thing. DAX is just coming back down again. We are approaching the 1.5 hour mark shortly. The other things I was going to look at today were the bias scorecards, which I haven't actually done because I've been waffling, but there's nothing much different on there. US dollar CAD has gone up to a 9 now. Aussie dollar, New Zealand dollar is now a -10. Even bigger sell. Yeah, we've got the world and his wife is longing it. Why is he longing it? Because the thing's coming down. And like all good traders, as soon as everything comes down, we go, oh, let's buy it. It's cheap. And then what does it do? Continue. Bloody hell. DAX is flying to the downside. We're just retesting these lows. I'm going to get into a short. So this is the pre-market opening range. There's your gap. So there's potential for the gap fill now to be done. That's a big sell-off, that is. We just had some news. That was half an hour ago. More sanctions on Russia. So with Russia, anything that comes out that's negative about the war, we get drops on all indices. So that started. That started before that news, so it's not news related. That, but we tend to get drops on anything negative as well. I was just wondering if we just had anything, but that's just price action. So yeah, so the main buys and sells basically US dollar CAD. Again, this is all. Most of this is caused by combined sentiment. So you know these ones look for pullbacks. Aussie New Zealand to get in short. US dollar CAD look for pullbacks to get in long. So any kind of levels you can see Aussie New Zealand, that's already tested. We've got a little propulsion gap at ADR. Is that a propulsion gap? Oh, on M5 it is, I suppose, isn't it? Yeah, it's already tested, but there isn't one on M15. So any kind of RSI extension, ADR, double top, which gives you a reversal alert. Look for shorts. Aussie New Zealand. I think we're starting the pullback potentially now. Yeah. So we need to get this low broken, which unfortunately we didn't manage to do. So we are still holding that low at the minute. But this is the area we looked at yesterday. Remember, I said this is where we're going to get the reaction yesterday, which we did. We've now retested that today. So that's your second knock on the door. Third time's the charm. We should push back down into that area there. So any pushes, I'll be looking to try and get in short on it and have another run up at that support. Possible mean reversion, 5 minutes, euro US dollar. That's very extended, isn't it? It's a really tricky one, euro US dollar. I want to long the euro, but I also am not going to run against the US dollar at the moment. The market is mostly long on it, so obviously it's taking out the lows of yesterday. It's difficult to tell where this is going, isn't it? Really difficult to tell where this is going at the moment. So this propulsion gap is basically where we're sitting at the moment. You can't really see it on the 4-hour chart. So that was the first test, which we bought up. We're now back in here. I would say this is probably going to fail. This is too old. When we were here, the fundamentals on the US were not as good. As soon as we started that FOMC and we got those unemployment figures, we've now got massive strength coming through on the US. I think this is definitely going to need to pull back at some point. But I much prefer shorts on it. So I would be wary about me reverting that. It is very, very extended, though, on the 5 minute. Very extended. We're down 17-ish area. Yeah, we don't often get down here below the 20 level. But M5 is I don't trade M5 RSI. M5 RSI is not that reliable. You know, you got extended on the M5 RSI there, and it just did that. Yes, you would have got out. it's, you know, it works, but what degree it would work to, don't know. And the thing I don't like about this is you've got no support anywhere. Look, you literally have no support until you come back down to the return to origin of that propulsion gap or that support which started that move. So if you're going to mean revert it from here and it decides to squeeze on you, i.e. go sideways, drop, you're not going to have an out for a while. Mind you, it's 1.5 ADR. So you're only going to get into 1, 2, maybe 3 positions before you get that bounce. And if you get into that bounce, if you get that push down further, RSI on the hourly is going to be extended, in which case we're going to be ready for a profit take move. So I think it might be a bit early, but, you know, it might work. I've no idea. You're not going to get a reverse alert on it until you're broken back above yesterday's low, which, to be honest, isn't a bad place to take a reverse alert because it means they've just done a liquidity run. However, you are then jumping on board with retail, which we know the market tends to push against. So it's a tricky one, that. DAX, I am now out of the DAX. Pending orders are cancelled 1.5 hour in. So that is either the high of the session and that is the low of the session. One of those two is true with 90% accuracy. Which one? You decide. I would say probably the high. Looks like it shorts from here. Barry, NAS shooting down fast. Yeah. That would have come down with the DAX. So that basically took that low. Look, I don't know what that was. There's just a massive sell-off, sector sell-off or something there. But we've got these gaps to fill. Look, I like this short from here. I definitely like this short from here. Yeah, got a propulsion gap on both of these. So if we can pull back into that propulsion, I'd short that. I'm not, but that's what I would do if I was going to trade that this morning. I have seen over time watching you, it is and can be useful automation. I was very turned off at first and wrong. Yeah, automation's great. You've got, I like I say, I do not ever use automation unattended. I'm not a believer in there being an EA that you can stick on a chart, go and sit on a beach and drink a Mai Tai and never work again. I don't. The people that are selling those EAs that you never have to touch it, I don't believe they exist. I know they don't exist. I've been around in this industry a long time. I've been a member of MQL5 for many, many, many years. And I've seen the EAs on there rebranded, renamed, the signals disappear, come back again, disappear, come back again. And the reason they do it is because they blow the accounts. I've seen many EAs, and there's a really, really big one at the moment that's got a good year's worth of activity in it. I've seen 3 versions of that, and I bought it, and it has blown. And they will, because you can't build something that can read the market because it's a random thing. But I do believe in automation helping you as a trader and making you able to live a life and not sit in front of the screens 24/7, which is what the Market Reverse Alerts EA is designed to do. It helps me get into my positions and it helps me manage my positions. But at the end of the day, I am watching my P&L all the time. I'm keeping an eye on this. I'm keeping an eye on that all the time. I'm constantly in the P&Ls watching. Because, you know, if I'm sitting in $300 of profit, yeah, and we've got FOMC coming out in half an hour, that's going in my bank. The EA is not going to do that. It doesn't know FOMC is coming out in half an hour, and it doesn't know what I want to do with it, because it doesn't know whether or not I'm happy or not to receive that money. Yeah, but an EA is a dumb instrument that I can say, right, every time we get extended on the RSI on the hourly and we get an M5 reverse alert, can you enter for me? But just don't get in too close. That's literally what that EA does. And it just builds those positions and I get out when I'm happy. So I would never say to anybody, stick the market reverse alerts on every pair, go off to Thailand and have fun for a month, because I'm pretty sure you'll come back to a mess. You might not do. I mean, this is kind of proving me wrong at the moment, isn't it? The hedging EA. But I don't know what's going to happen in the next 2 weeks. You know, I'll leave this running because I'm still waiting for this to do something bad, and I can't. It's not at the moment. What I'm hoping it's going to do is get over a 1% into drawdown and get squeezed, so I can see how far it squeezes. That's what I'm looking for. I've done it in back testing, and I've struggled in back testing because obviously you can only back test one instrument. I need to see what the portfolio does. So this is what I'm really interested in. I'm interested in how many of these get over 1% and how much it affects that compared to what I get. This is what I'm trying to find out. And this is something you can't really do in back testing. So I thought if I do it on M5, I'm kind of replicating the hourly time frame in fast forward, if you like. So, but anyway, one day it'll get into trouble. If it doesn't get into trouble, I'm just going to transfer that over onto a live account, and we'll see. Certainly won't want to put that on a funded account, will you? That's not going to work. If you half your pairs, it would. So if you'd have put this on a prop account, you'd have made 7k profit off of a 5k drawdown. Which half of the pairs, though, are you going to pick? You don't know which ones are going to work, which ones aren't, do you? So that don't work. Any news on the sentiment EA? Yeah, it's running now. So this is the final version of the sentiment EA. Ignore the drawdown. It's doubled up a load of trades. And it's placed some trades it shouldn't have placed because I've put the new version of the EA on, which works slightly differently with the sell and buy distances. So it's taken a couple of trades really close together where it shouldn't have and things like that. And it's taken some trades it shouldn't have taken when I've put it on because the logic's slightly different. But I've discovered an issue. It's not an issue, but if you place the EA onto an instrument where you have taken trades with the EA previously, the sell distancing won't work because it stores sell distance from last trade when it takes the trade. But I don't think this is something that people will do because the idea is you put this on and you leave it on full auto. So, but obviously you will still want to watch it. Yeah, I don't think that would be an issue. But that does cause a problem, whereas it will take trades too close together if you do that. Only one. Once it's done it once, it won't do it again. So you see here, there's two cells. The cell distance should be 145. We've got too close together because it took this trade this morning and that number was 68735 instead of the distance because it didn't log that when I put it on because that logic didn't exist. It's complicated anyway. Rule of thumb, when you use the CA, if ever I get it to market, you put it on there and you don't touch it. Same as all EAs, you don't touch them. This is everybody that ever gets in touch with me on DMs, on Telegram, or through the MQL5 marketplace, saying something doesn't work. I say, have you adjusted anything? Have you touched anything? Have you done anything? It's like, yeah, I moved it from this VPS to that VPS. Of course it's not going to work. It's all wrong. The global variables won't be there. There's all sorts of stuff that won't be wrong. So you just have to educate people that EAs are designed to be put on a chart. You leave it on a chart. You never touch it. That's the whole point of it. It's an automated trading system. If you start touching it, you're manually doing stuff. It's not going to do the same stuff, is it? So that won't be a problem as long as people don't touch it. But even then, the worst case scenario is it's going to get you into two trades close together. And as long as the sentiment in this case, like 92% of the market is long, as long as that's like that, that's coming down. So you haven't got to worry too much with it, I don't think. But yeah, it's all done. So I'm logic testing now and I've got to track all trades taken from today. So I'm going to give it a week. and then test the results, check the distancing, check it took them at the right levels, check the right arrows have triggered based on what level it was trading. And then I've just got to tidy up stuff, and it'll be ready, I think. So yeah, it's getting there. Made a loss yesterday, look. First loss it's taken because it had to scale out of some stuff. So we had to scale out of some US dollar Swiss, Aussie New Zealand. We banked Aussie Swiss, another Aussie New Zealand. Yeah, so it had to scale out of Aussie New Zealand 3 times, look, yesterday, because of that move, look. Fundamental. This is what this is, and this is the thing. This is the important thing. You know, somebody said to me, someone posted in the Telegram group a couple of weeks ago, I don't think this sentiment thing's any good. Look at this. It's absolutely gone the opposite direction by over an ADR. Yeah, it was a news event. And this is exactly what I said earlier today. It doesn't matter what this says, right? That was a news event. That was the New Zealand dollar rate announcement, right? It doesn't matter what the sentiment is. This thing is now going to move where the fundamentals drive it. So you have to be aware of that. And obviously that's why we scaled out yesterday, because that position that was taken there, which was a 1.36, had to be reduced. So we had to take some loss because the fundamentals went against us. However, 70% of the market is now long on this, and we are now one of those longs. So what I will be doing personally, if this was me trading in the real world, I would be now waiting for that to get to there to close this position, because I believe this is coming down. So, you know, and this is what I mean by using EAs for semi-automation. Yeah, what I should do is let the EA run and hope it gets back up to there and hope that it gets to my $500 0.5% profit target. But in reality, I don't think it's going to manage it. So if I can get to a break even, I'll shut this and take that $450 loss. Doesn't really matter, does it? Because I made $440 on Aussie Swiss. So it cancels itself out. But you know, so I'm trying to. This is partly why I'm developing this and running it live, because I need to see what happens when we get this sort of situation happening. Do we need a rule that says if sentiment has gone against me, maybe change the scale out to 50% instead of 30%, or do something? It needs to do something else, doesn't it? Now we have just jumped into the retail boat. The retail boat is wrong. So we don't want to be long because they're all long, which means that the liquidity is all the opposite direction, which is where the market will tend to go. Yes, it will probably pull back and entice some longs further, but that gives us our out. How do we get out of these situations? That's something we're not going to be able to really figure out until it's been traded live for a while. So it will be developed. But at the moment, obviously, I need to see what happens with this. And obviously you can't backtest this. This is a problem. It's not a backtestable strategy because there is no data for it. So anywho, yeah, so it's nearly finished basically. It's finished from a coding perspective. I'm happy with everything. But it needs to be tested. Would you short US dollar Swiss at previous high? If you want to. You're going, look at the fundamentals on US dollar Swiss. It's a buy. We've got COT on side. Fundamentals are a little bit mixed on it, but and we've got retail are long on it. So we should be looking for shorts. So it depends. It's a mixed one, but it's a buy more than a sell. So there's nothing wrong with taking a mean reversion at that high. The reason, you know, whenever you get to a high, even if that high fails, yeah. So you got a double top there. Look, that triple top failed, but what you find is even if a triple top is going to fail, you'll get a reaction at the high, a double top, triple top, quadruple top, whatever top it is or bottom. You will find you'll get some kind of reaction usually anyway, because there will be limit orders sitting there placed in the market by participants ready to trigger. Yeah. So as we get there, the limit orders will trigger and drive price down. How far they drive down will depend on the volume of the triggers and how many buyers we have on side that want to drive this market higher. So this one's a good example. Look, it failed, but it failed with a 4-hour drop, 4-hour selling rally. The other thing you got to remember is when you get a run up at a level, think about, if you were here yesterday, I was talking about market exhaustion and elastic band theory and that sort of thing. An ADR, the market participants have got a certain amount of money to execute in the market. If you've been buying and buying and buying and buying and buying for 3 or 4 hours on the trot to get price to a specific level, you are exhausting your buying power. When you get there, if you meet a load of sell orders in the form of pending orders, you won't have a lot left to combat it. So that's why you get a pullback. Yeah. And you'll also be in a lot of profit, which you'll probably want to take as well. And then you can start a new run up. So that's why you get that sort of movement where you get the pullback and then the breakout. Yeah. False breakout. A false breakout basically is a failed attempt by the buyers to make new highs. Yeah. Doesn't mean they can't have another run up. It just means it's a failed attempt and you tend to get a pullback, which is why double tops work so well. But what people tend to do with double tops is go, right, I'm going to get in short when we come back down and I'm going to place a stop there and I'm going to go for a 5-to-1 risk reward. Of course, what they get is that because market structure is long. That's why people go, oh, it went my way. I moved to break even, then I got stopped out of break even. Well, of course you did. That's what market structure is. It's movement up and down. If you go short and then put a pending order there to get you out of the market, you'll get out of the market. People wonder why they get stopped out of break even all the time, because you put an order in to tell them to get you out of break even. Market goes up and down all over the time. That's a random thing. It goes up and down, up and down. If you put an order in the market, it's going to trigger. Stop putting orders in the market, they won't trigger. Again, we're going back to what we've covered all week, haven't we? Stop using stop losses. I've been short Aussie dollar, US dollar for 2 days, took half in profit, still in, starting to sweat. You're an Aussie US. Yeah. Good. I'd stay in it if I were you. We've got news this afternoon. GDP. We're forecasting a 2.9 on it. So I think with the figures we've had so far, with all the unemployment drops, all the bullishness we've had, I get a feeling there's a good chance we'll have a higher than expected GDP figure this afternoon. And if that happens, we're going to get a rally on the US dollar. So I would stay in that Aussie US short, and I would keep, and I just talked about break-even stops, but wherever you've got your entries, put in a break-even average on them, or just a break-even on the individual trades, and go for it. You know, it's up to you. And this is why it's all trading is discretionary. If you're in a position, if you've been in it for a couple of days, let's say you went in short there, and then you added another one down here, your average is there. It's up to you. Are you happy to take profit and bank that ahead of the news because it's going to move? Or do you fancy going for a big win? Because you're either going to get nothing or a big win, or you can bank what you want. There's 3 choices you've got. Which choice you make is entirely down to you, and you give 3 traders the same scenario, you're going to get 3 different results. So you either go for it, accept the profit you've already had, or take a little bit more. Take it off now and go, brilliant. Think about the psychology. If you take it off now and it goes back there, you'll be like, happy days. If you take it off now and it goes like that, you'll be like, oh, and you'll be annoyed at the market. So that positive trade becomes a negative in your brain. That's what affects you psychologically badly. Yeah. Every time we take a trade off, right? We go short here. We go, woohoo, look at that, get out. And it goes like that. That is a negative reaction. When you get out there on a trade and you are happy, when you see that happen the next day, you are sad. So even being right on a trade is a negative for a lot of people, which is why when you're position trading, if you remove all of the negatives, the stops, you only have a positive reaction. If this thing goes down and you get out there, what you're doing is you're chaining together positives. Yeah. Every single trade that you take is a positive, pretty much. Yeah. Most of them. Yeah. Positive after positive after positive after positive after positive after positive. Yeah. We'll get a little bit more positive as we go along through that day. If you have positive, positive, negative, positive, negative, negative, positive, and then that positive that comes after those two negatives cancelled out those two and gave you a break even, and then your trade ran 3 times more than it was expected, that positive becomes a negative. The psychology of trading and how you take your trades off has a massive impact on your future trades. If you take it off here and it goes like that, and you could have bought yourself a Ferrari, you will be thinking the market owes you. That will make you cross. It makes you over leverage. It makes you take stupid trades because you get cross. So there is never a right answer. You just have to try and get rid of the psychological part. That's the hardest bit of trading. But I suspect we're probably going to get strong US figures this afternoon. So I think we'll probably get a push down on the Aussie US. I'm expecting to see some ADRs on the US pairs this afternoon. We've got no yen today. We've had no Asian session. So there's no book to pass over for London, which is why we've got a fairly quiet London as well. So New York's really the only session we're going to get any movement this afternoon. And I think it might be big. They've got their pockets nice and deep, filled with money, and they haven't moved it yet. You look at the DAX. Yeah, all we've done is return to origin today. That's where we opened. We're back there. We've done nothing today. We're forming a hideous head and shoulders, which might actually work. This might actually be a head and shoulders that works because we've got a gap fill. You never know. Thinking pound yen is a long term, is a long from here. Pound yen. Is there a gap? Is there? Where are you seeing a gap? Do you mean the propulsion gap? Yeah. Yeah. I like I said earlier. Go and look at all the yen pairs on the hourly, yeah, and look at what's happening with all these yen pairs at the moment. So this is what 1, 2, 3, 4, 5, 6, 7, 8 or 9 days sideways. Snap, 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 and look at where we're doing now, breaking down. Yeah. So this is either liquidity running for a high. I would say more likely we've just taken the liquidity to run short. So I think we're probably going to see a power up with the yen. The pound yen is certainly just filled that gap and it's slammed through it. Look, we're through it now, completely filled. We're bouncing off of support. This is exactly what I was saying about limit orders earlier. Yeah. This support here. Yeah, this is just limit orders triggering. Doesn't mean this is a bounce point. This is just people's limits triggering. Everyone's buying resistance turn support. Doesn't mean that is going to work. But you look at all the yens, they're all the same. Look, we've stalled. We're stuck. The yen is not letting it pass. So I'd be wary about longing the yen. I'd be much more interested in shorting it at the moment. But, it could go either way. I don't know. Been sliding mount down your stock, chasing it down. Yeah. That's absolutely fine. But when you get stopped out, I prefer to take money off than get stopped out a lot of the time. And if I use trading stops a lot. You've seen me in here using trading stops a lot. And I make them really close. It's a case of, right, I can't be asked. My TP's there. You're mucking about. I can't be bothered to watch you anymore. So I put a trailer on it, knowing full well that that is the 80% outcome rather than that. Just so that I can walk away from the charts and not bother with it anymore. I don't want to take it off here because we're so close to the TP. But then again, I'm not going to let it go against me. So that's why I use trailers. So that's a good thing you can do this afternoon. If you're still in this afternoon, use a hourly or a 15-minute candle and look at what that's 90. So stick a 90-point trailer on it, 100-point trailer, 10-point rather, 10 pips, isn't it? 10-pip trailer on it. Yeah, and when the news comes out, it's either going to go boom and you're going to thank yourself, or it's going to go boom and that trailer's coming down with it. And then if it pulls back, you get a lovely little win if they do a liquidity run on that low. That would be what I would do with it. So at 1:15 UK, stick a trailer on it. And then you're either going to be very, very happy or you're going to be very happy. Always make it a happy ending. That sounds rude, doesn't it? Right, I'm going to leave it there this morning. So DAX, basically, all we got was I'm break even on it. So made a loss on the short, made a win on the long, and we're just back, not gone anywhere. So going to look at the NASDAQ this afternoon. Obviously, depending on what happens with the GDP figures, we'll probably find the NASDAQ. If you look at the London session, it's just a dead session. Asia was dead. London's dead. We've got the news coming out before New York. So before the New York opens, we will have that move based on GDP. So we'll see what happens. Probably a mean reversion, I guess, in the New York session. But it depends what the GDP figures are, whether or not it's a knee-jerk reaction or whether or not it's actually good. So those are 130. So be aware of that. If you've got any US dollar positions on, get ready to take a load of profit. That's the other nice thing about the hedging set file as well that I love. When you get a news event, this doesn't tend to move, but that just gets filled up. See, I've just got, that was 180, wasn't it, a minute ago? Now I'm 500. So I'm 0.5% up, which is why the DD's pumped up a little bit. But that just fills up. It's like news event comes out and that just fills up with money. It's amazing to watch. I love it. Obviously, you got to be careful of that. And obviously, it will do all the DD for you automatically anyway. But yeah, it's really nice. I love news events. When I was watching this the other day when we had the what did we have the other day? Some news event. I can't remember which one it was. What was the US dollar news the other day? Oh, the PMIs. I was watching it on my VPS on my other monitor. It just went and filled it up with a couple of $1,000. It was like, thank you. But obviously the drawdown then obviously jumps up as well. So as long as it pulls back, that's all that matters. Chat GDP? Chat GDP? What? I know what you mean. Right. So I'll be back this afternoon at 2:20, 9:20 US for the New York session. Obviously, watch that. You've got the news this afternoon. So be aware of obviously that. We may get nothing. If it comes out as expected, we might not get any reaction, but that has the potential to make a big change. And obviously the GDP is going to affect the scorecard as well. So it's unlikely actually that it will affect us because I think they are pretty much ahead of everything. GDP wise, yeah. So even if actually, yeah, no, this will strengthen the US. So if we're on a 2.9 now. If we get a 2.99, that -1 on GDP becomes a 0, which will strengthen all the US dollar positions. So if it comes out as expected or better than expected, we are going to get a change in the bias scorecard today as well. So where we've got the -1s in the bias scorecard for GDP on the US dollar, if we got some, wherever we are, can't find any. Yeah, so that's a 0 at the moment because it's the same because Canada went down as well. But this will change to potentially a +1, which makes us a +10 buy. So there's a good potential that we could strengthen all these by 1, making the US even stronger moving forward. So, Testy 2, sir, the spam bot enters the chat at the end. Thank you for sharing happy FX signals last week. I Googled it. Their group is free. Thank you again. Made some profits. Just about to get conned. Bye-bye. Let's report him. Unwanted commercial content or spam. Bye-bye. It's a bot, so it'll be back tomorrow. We get inundated by them, don't we? And then all of a sudden it goes quiet for a while, and then they all come back again. Anyway, I'll be back later, 2:20. If you need anything, I'll be in the Telegram group. But other than that, have a good morning. I will see you this afternoon.